Today we will be reviewing a popular ETF that's known for their strong dividend potential and low costs, Vanguard's High Dividend Yield ETF, ticker symbol VYM. This ETF is designed for those looking to generate reliable income with a focus on high-quality, dividend-paying US companies. We'll go through this fund's holdings, historical performance, dividend yield, and how it compares to some other dividend-focused ETFs. So whether you're looking to add a new income-focused investment or simply curious about this growth potential, let's see what VYM has got to offer. Alright, so let's see what VYM is all about. This fund is designed to give investors high-quality, dividend-paying companies across the US stock market. It's focused on companies with higher than average yields, which makes it attractive for investors looking to generate steady income. Now, what are the holdings that make up VYM? The ETF is broadly diversified, holding hundreds of stocks across multiple sectors. Currently, its top sectors include financials, industrials, healthcare, and consumer staples, which represent a good mix of growth-oriented areas. You will have also noticed that they are quite balanced in their sector exposures, with multiple weightings around 10% of the fund. This balanced approach helps reduce volatility and keeps the income stream steady. As for the individual holdings, VYM's top stocks are some big names that you have already heard of, such as Broadcom, JP Morgan, Exxon, and more. These companies are known for their stable earnings, strong market presence, and of course, consistent dividends. So holding on to VYM means that you are also getting exposure to these big players without needing to pick the individual stocks. Now, if we compare VYM's composition to other dividend ETFs like SCHD, there are some key differences. VYM's portfolio is a bit broader, with approximately 537 stocks in this fund compared to SCHD, which holds around 101 stocks. The difference in the number of holdings means that VYM is more diversified across individual companies, while SCHD takes a more selective approach. When we dive deeper into a comparison of their sectors, we see that they're actually quite similar. Both have heavy weightings in sectors such as financials, healthcare, technology, and consumer staples, which align with their focus on dividend-paying companies. Both have their advantages, but VYM's diversity helps spread out the risk. Let's look at VYM's historical performance. Over the past 10 years, VYM has experienced about 155% growth in the share price alone. If dividends had been reinvested during the same time period, the total growth would have been around 191%. For context, this would have turned a $10,000 investment into approximately $29,100. On average, that's roughly a 10% annual return, highlighting how VYM's performance has been competitive and at times close to or above the broader market in the S&P 500 when dividends are included. When it comes to the dividend itself, VYM has shown a history of consistent increases, which can be appealing for those interested in dividend growth. This pattern reflects both the growth of the fund's holdings and a focus on delivering reliable dividends to investors. So, with VYM, there's both an income component and a potential for capital growth over time as dividends and underlying investments grow. Another interesting part of VYM is how it performed during challenging market periods, like the 2020 market downturn. When we take a look at the 2-year period from January 1st, 2020 to December 31st, 2022, we can observe how market volatility impacted VYM compared to the S&P 500, represented here by VU. At the end of this nearly 24-month period, VYM showed a slight edge over the S&P 500 in terms of performance. This is reflected in the graphs. While VU experienced a notable decline, VYM's drop was somewhat less pronounced. This difference in volatility shows how a dividend-focused ETF like VYM may react differently during downturns, potentially offering more stability for income-focused investors aiming for steady income through market cycles. Now let's dive into the performance comparison between VYM and SCHD over the period of October 24, 2011 to about October 30th, 2024. We can start this with a $10,000 investment. SCHD would have grown to about $49,000, while VYM would have been around $43,000. This averages out to approximately a 13% annual growth rate for SCHD and a 12% for VYM with dividends reinvested. While the sector ratings of these funds are quite similar, VYM holds a broader range of stocks, around 500 compared to SCHD's 100. This means that they both cover similar sectors, though VYM may offer greater individual stock diversification. Each fund has its own strengths, and VYM's broader holdings will help decrease risk, though this could also slow potential gains compared to a more focused fund like SCHD. Ultimately, it's helpful to consider how either may fit into your overall strategy. Now let's compare the S&P 500, represented by VU, to VYM. For consistency, we're using the same time period from 2011 to 2024, with an initial $10,000 investment. As shown in the graphs, VU would have grown to about $58,000, while VYM, as previously mentioned, would be around $43,000. This translates to an average growth rate of 14.5% per year for VU compared to 12% for VYM. The main difference here is that VU's focus is on price appreciation, which often results in higher growth. While this does mean that VU outperforms VYM in terms of overall returns, it's important to note that VYM's dividend-focused approach might better suit those looking for consistent income. So both funds have distinct strengths that can cater to different goals, depending on whether this is growth or income. In conclusion, VYM offers a solid choice for those interested in dividend-focused investing with broad diversification. We saw how VYM holds around 500 stocks, which spreads out the risk and keeps it well diversified within high dividend sectors. When compared to both SCHD and VU over the same time period, VYM provided a steady growth rate, averaging around 12% per year with dividends reinvested. Although it might not match the rapid growth of a fund such as VU or higher returns such as SCHD, VYM has a unique balance that may appeal to investors prioritizing income along with stability. Ultimately, it's clear that VYM brings a different value to the table than funds focused purely on growth. It can serve as a reliable option for those looking to blend dividend income with diversified equity exposure. Hopefully this video helped clarify where VYM stands compared to some popular funds and provided some insights on what it brings to a portfolio. And if you made it this far in the video, please like, comment, and subscribe for more financial education related content.